Staying on energy, Shell working to cut carbon emissions starting in 2020, and they'll link executive pay to meeting those emission-cutting targets. John Hofmeister is with us, and he is a former president of Shell Oil. What is this? An oil company caving to the Greens and walking away from fossil fuels?
Stuart, I think it's. I don't speak for Shell anymore, of course, but I think looking ahead, this is to preserve and protect the franchise of fossil fuels into the 2040s, 2050s, and beyond. If you look at if you think about how the world will continue to need oil, the right to operate, the license to operate, is going to require some kind of an accommodation on what are we doing to get rid of fugitive emissions. What are we doing to bring down the cost of carbon capture and sequestration? These are things that a company like Shell can do very well.
So the authorities insist that oil companies sign on to climate change and join the fight against climate change by cutting emissions. The governments insist that oil companies join in.
It's actually coming from shareholders as well as government. So it's going to hit all companies. The U.S. companies are going to be signing up for some kind of pay change as well.
Really?
In the years ahead.
You think ExxonMobil is going to be dragged into this?
Absolutely. If they want to preserve the fossil fuel industry, we're going to need fossil fuels. But in order to make it happen, there's going to be, as I said, this compromise, if you will, on what can the companies do themselves to reduce the carbon impact of their business operations. And it can be done.
All right, I want to talk to you about OPEC.
Okay.
They meet Thursday. They say they're going to cut production 1.3 million barrels a day.
Yeah.
Will they do that? Will they actually do it?
I think with Russia joining forces the way they just signed an agreement with Saudi Arabia, as you know, or, informal agreement, but they just got in cahoots with one another. I think they are all feeling the pain of $50 oil.
Yeah, but can they make it stick? I mean, who's going to cut? Who's going to reduce their revenues at their own expense? Who's going to do that?
Well, they can actually, if they cut enough oil, they can make more revenue on less production if the oil price gets back to $70.
But won't we, America, and our frackers simply step in because we can produce a whole lot more?
It does open up more market share for us, but we're held back by the logistics of the oil patch in the U.S. for now.
But the threat of the frackers stepping in is enough to keep the price of oil at $53 a barrel and not shoot it back to $60.
Well, I think we're going to have to see some action on the Iranian sanctions for that to actually to sort all of this out. Because if we cut back on the Iranians selling their oil, that would be helping OPEC and helping the U.S. as well and hurting Iran. But we've given all these waivers to Iranian customers to let them continue to buy that oil, so Iran's continuing to produce it. There's just too much oil in the market right now.
That's right. And we're going to supply as much of it as the world wants.
Well, we will.
It's a wonderful thing. John, thank you, sir. See you later.